All right, let's start. We finished auto insurance, but this is an interesting article. I somewhat noticed this, I think, myself, because USAA, because I used their telematics, they said you can get this big discount, and I never noticed it, but I think it's because the discount offset the rising rates. So they're saying car ownership is getting more expensive because of what's going on with auto insurance. The cost of auto insurance is up 21%. In February, the biggest jump in the cost of car insurance going back to 1985. I don't know if y'all have noticed that. It's the biggest price jump from February in 28 categories. So there's auto insurance at the very top. So the question is, why is that? They blame COVID still, but while we're well past COVID, car insurance doesn't get nearly as much attention. Obviously, rent is the one that's been driving the number recently. Overall inflation is down sharply, but it's not falling to the 2% yet. Insurance, car insurance is only 2.5%, which is an interesting number because you might look at what your auto insurance is to your overall budget, 2.5%. And it's part of the core inflation, obviously. The Fed Reserve keeps close eye on this, the core inflation, so it's part of that. Insurance now costs typical car owners $200 a month. Does that seem reasonable? I think mine's kind of like $95 a month, but for buyers who take out a loan to typical payment, so they're also talking about ownership because rates are up higher too for borrowing money. So yeah, if it's just auto insurance is really we knew used car vehicles and others got really high with COVID, but now auto insurance is up a bunch. So when COVID hit in 2020, a lot of firms were paying special dividends because you saw insurance, people just weren't driving. But it looks like that might have been a little bit premature because it certainly has come back. No single cause, so that's the other problem with this is how do you find out? They have a link here to another article. Latest inflation, car insurance. So it's an interesting article. I might try to put this out there for y'all on it's an article you can click on. But interesting that this is Yahoo Finance, so they don't normally write about car insurance. So it must be a big deal if they would specifically write about it. But it's interesting. So COVID triggered a chain reaction of supply and demand distortions on industry, supply chains, snafus, and semiconductor shortage, caused a dearth of new vehicles. The usual outcome when demand exceeds supply, soaring prices, more expensive cars cost more to maintain and everything. So they really don't know the real cause of it. I bet actuaries know and are doing a lot of analysis to try to figure out if that's a one-time thing because of COVID or something else, or if there's something else going on. It is true, though, if car prices have gone up, insurance is going to go up because you're covering the replacement of cars. So just the fact that cars are more expensive is probably a big part of it. But the question is, so that would be severity. The question is frequency changing as well? Have we changed our driving habits because of what's happened the last few years? All right. So let's get back to commercial insurance. So real key for liability is what kind of damages you can get. We'll look at some of these damages in some of the articles we'll look at. So you have compensatory damages and you have punitive damages. Compensatory damages are two types. Special damages, which is really you're just covering your actual losses. Those are the bills you have. And then general damages is the pain and suffering. So pain and suffering is part of compensatory damages. It's the most subjective part. The special damages is you usually have a bill or something that you can show. Punitive damages is where the court is trying to make an example out of the plaintiff or out of the defendant to try to encourage others not to do what they do. Most articles, we're going to look at a tort reform series of articles, not to memorize them, but just to see what do we mean by tort reform. But punitive damage is a big part of it. I'm not sure I agree with that part of tort damages. if a multi-billion-dollar company causes tremendous damage, to say that punitive damages can only be 2 times compensatory damages doesn't make sense to me. If I mean, a good example, people like to talk about the Ford Pinto. Y'all probably don't know that case at all. I should put Ford Pinto. Oh, what was his name? I just forgot the famous economist's name, Milton Friedman. Y'all should watch this. How do you spell Friedman? That's right. Yeah. So he's great in these videos. I know he's passed away. I saw him once in my life. He spoke at a conference I was at. But he's so calm. And the people asking questions hate his guts. You can tell it because they're like, you're an idiot, blah, blah, blah. And he's like, interesting point, but and then he just destroys them. And he's talking about the Ford Pinto, and he's making the economic case that should Ford had fixed this car. So this is a car that was blowing up because people were hitting the gas tank. And everybody's like, how evil is Ford? He makes the point that if Ford had fixed it, it would have caused car prices to go higher. It would have ended up harming more people than the actual car did. And he has the data to show it. But he's really interesting. And, you know, this guy probably hates his gut, but
Ford Phillips spent that. Ford Phillips spent that $200 million. You need to put.
Yeah, so he's really, really good. There's other places where he's just exceptional. His most famous one is How Do You Make a Pencil, but he has some other really good ones out there. But that's one, you know, if Ford is really this massive firm and they decide, hey, let's not fix our car because it's cheaper for us not to fix it than it is to pay these lawsuits. You know, should society say, hey, you got to pay whatever the damages, whatever the punitive damages are, no matter what the compensatory damages is. The most talked about case, and I've heard this so many times still today, is the McDonald's hot coffee. So let's look at this case as an example. Is that really the tort reform poster child or not? I don't think it is. I think it's actually a pretty legitimate case. But I hear it on the news still today, people just saying, yeah, people getting sued for hot coffee. So let's look at it. I don't know how many of y'all have read this case. Any of y'all have looked at it in detail a little bit? So this family sued McDonald's. It's known as the McDonald's hot coffee case. Several years ago, the jury awarded $160,000 for compensatory damages, and they awarded $2.7 million for punitive. Now that's going to get reduced down. It almost always is. To Stella, pretty old name there. So people say, yeah, she spilled some coffee on her, and she got $2.8 million. Seems excessive. And that's what people stop. They just see something spilling, you know, spilling coffee. So what most people don't talk about is she had 3rd-degree burns on her body. Does 3rd-degree burns sound immaterial? That sounds pretty serious. And we're talking about a grandmother here whose skin is already not in the best shape to begin with. The trial judge reduced the final verdict and the parties settled for some amount, but they didn't pay the 2.7. So people talk about a frivolous lawsuit. I'm going to show you a couple of frivolous lawsuits, but I don't think this is it. But y'all know what a poster child is? Do you use that phrase much? Poster child? I've had some people. So poster child is like, it's the best example of this thing. So it's the I don't know. When people are raising money, they might have some sick kid in the picture, and like he's the example of why you should give money. So we call that the poster child of excessive lawsuits. And other people says it was meaningful and worthy. So the attorneys argued that McDonald's coffee was defective. So they were saying there was something wrong with the cup itself. And they claimed it was too hot. And McDonald's admitted it was too hot. Not only that, they'd had many, many, many injuries before. And they knew it was too hot. Sounds a lot like Ford. Yeah, we know it's a problem, but our customers like it that hot, so we're going to keep burning people. McDonald's had refused several prior opportunities to settle for less. Supporters of tort reform claimed the popular perception of the case was materially accurate, claimed that the vast majority of judges who consider similar cases dismiss them before they get to jury, and argued that McDonald's refusal to offer more than $800 settlement for the bills reflects the meritless nature of the suit. So, people are saying this is frivolous, but let's look at the actual facts. She's 79. I think that's important as well, because I think that's part of why the damages were so much. It's also what she was wearing. The clothes she was wearing added a lot to this. Coffee used to be I don't know what is coffee today in McDonald's, but back then it was 49 cents. She was in the drive-through. That's the other thing people were saying. Hey, she's driving with coffee. She should know better. Well, she wasn't driving, but she was in a car. They even give you the location. You also go to that location and ask them for coffee and see. She was in the passenger seat, and her grandson was driving. She wanted to add cream and sugar. She placed the coffee cup between her knees and pulled the far side of the lid toward her to remove it. In the process, she spilled the entire cup in her lap. She was wearing sweatpants. I don't know if I've ever worn sweatpants in my life, but they absorbed the coffee and held it against her skin, scalding her. She was taken to the hospital. So a lot of people perceive that she's just got, a little wet and her skin maybe turned a little red, but no, she had to go to the hospital. She had suffered third-degree burns on 6% of her skin and lesser burns on 16%, so about a fifth of her body. She remained in the hospital. Look at this. Someone's in the hospital for 8 days. Does that sound minor? When's the last time you were in hospital for 8 days? You don't stay there have a baby anymore, do you? For 8 days?
Maybe 2.
And skin grafting, how many of y'all want skin grafting? During this period, she lost 20 pounds. Remember, this is a 79-year-old woman. She went down to 83 pounds. 2 years of medical treatment followed. Does that sound frivolous? And they talk about how frivolous it was. Her attorneys discovered that McDonald's required them to heat the coffee to 180 to 190 degrees. The coffee caused third-degree burns in 2 to 3 seconds. McDonald's know this because she wasn't the first person to sue. McDonald's showed that from 82 to 92, the company had received more than 700 reports of burned people and had settled claims arriving from scalding. McDonald's quality management control testified that his number of injuries was insufficient to cause the company to evaluate its processes. He argued that all foods hotter than 130 constitute burn hazard, and restaurants had more pressing dangers to warn about. The 12-person jury, they applied the principle of comparative negligence. We'll talk about this. That used to be a complete defense. So if someone's negligent, they call you harm, but you were also negligent. Used to be, even if you were only 5% negligent, they cancel the case. Now courts say, hey, if you're 20% negligent, they're 80, then we'll take the losses and we'll reduce it by 20%. And that's what this jury did. So they found McDonald's 80% responsible and she was 20% at fault. There was a warning on the coffee cup. When's the last time you read a warning label on a coffee cup? Probably not too often. The jury decided that the warning was neither large enough nor sufficient. So she got 160. They rewarded 2.7, and they want to penalize McDonald's. Essentially, they equated the size of McDonald's. They said, how much coffee do you sell in a day? And they made it based on that, and that's the problem with punitive damages. It's going to be really, really subjective. But they settled for some undisclosed amount, less than $600,000. So I don't think this is a frivolous lawsuit. I'll show you one that's a little more frivolous. Maybe the most frivolous one. Y'all might be able to think of a better one. I don't know if y'all have heard this one. So he went to the dry cleaner and he gave them their pants. He sued them for $67 million because they lost his pants. And then he ended up getting in a lot of trouble. for doing this, because he's a lawyer. So they're like, you should know better than this. He ended up destroying this company's entire livelihood. They had to get out of business because he caused them so much. But his argument was they advertise service or satisfaction guaranteed, and they advertise it on all their stores. And he said that's false advertising. So he sued them under that law for $67 million and put this poor family out of business. So it's an interesting, I can't think of a more frivolous one than that. So yeah, he got in a lot of trouble for doing it. You can probably find him on YouTube. Here it is. Here's the actual case. Pearson versus Chung. The 54 million pants. The civil case is cited. Sued his local dry cleaners after the dry cleaners Atlanta lost his pants. He had a pair of gray pants. And when the pants were returned to him several days later, he insisted that the pants presented were not the pants he initially dropped off and accused them of losing his pants. Pearson demanded compensation of $1,000, which Pearson claimed the pants to be worth. I doubt that, but they refused. In response, he filed a lawsuit for inconvenience and mental stress for $67 million, though later reduced to 54. So he's a little kind. So, all right, I'll take 13 million off. The case went to trial. He represented himself because he's a lawyer. He argued that they had failed to fulfill their same-day service and satisfaction guarantee promises posted on their business. They argued that the signs could only be considered fraud if a reasonable person could be misled by them. He lost the case. In subsequent appeal, they made a motion to recover their legal fees, but withdrew it following conclusion. They did get a fundraising. The case drew international attention, has been held. Example. Can y'all think of a more frivolous one than that one? I mean, that's getting there in the ballpark, isn't it? But here's one I think you could probably question either way. This is one, a lawsuit against BMW, which give you a sense of what firms are facing. So every time you have a lawsuit, you got to decide the legal costs are extremely expensive. Do you have a chance to win? Even when you win, you may not get your legal costs back. So each one of these is a cost-benefit analysis. So this is a guy who bought a BMW and discovered the vehicle had been repainted before he bought it. So it had been damaged slightly. They discovered it, they fixed it, repainted it, but didn't tell them that they repainted it. The defendant revealed that their policy was to sell damaged cars as new if the damage could be fixed with less than 3% of the cost of the car. So they knew they were doing this. Gore sued, and they awarded him $4,000 in compensatory damages. And that's what he argued. They argued that's how much the value of the car came down because it was damaged. How anybody else would know it was damaged, I don't know. But they gave $4 million in punitive damages, later reduced to $2 million. Does that sound excessive and frivolous? So what's the court saying here? BMW has a requirement to tell any buyer that the car has been damaged, even if it's only 3%. So that's what the court is saying. Is society worse off because BMW? If you bought this car, now the question is, how did he find out about it? And that I don't know. There's probably in the case course somewhere. I don't know how they figured out. The court found that the excessive punitive damages in this case violated due process. For punitive damage to stand, the damages must be reasonably necessary to vindicate the state's legitimate interest in punitive and deterrence. Punitive damages may not be grossly excessive. The Supreme Court applied 3 factors: degree of reprehensibility. Does it sound like BMW was just like egregiously reprehensible? It doesn't sound like it in this case. They had a policy, it seemed very reasonable. The ratio of compensatory, so you're going to see some say, hey, you can't do, if your compensatory is only 4,000, your punitive can't be way out of line with that. I kind of disagree with that if it's something the firm should not be doing. Comparison punitive damages award in civil or criminal penalty that could be imposed, or essentially kind of saying how bad was the misconduct. They found that BMW's conduct was not particularly reprehensible. It wasn't, especially they weren't like putting people's lives at risk. Unlike McDonald's, which is, actually putting people at risk. The ratio of actual and potential damages to punitive was suspiciously high. The criminal sanctions available were limited to 2,000. B&W could have had criminal sanctions, but pretty limited. The court noted, however, that these factors can be overridden if it is necessary to deter future conduct. The Supreme Court of Alabama ordered a new trial unless plaintiff accepted 50,000 in punitive damages. The court reasoned that it may not have given sufficient weight to the degree of reprehensibility and selected the 50,000 as a range. So this is what every firm has to think about when they're being sued. Are they going to take the court case or not? You saw with that family that got their dry cleaner sued. They're facing a lot of legal bills. Fortunately, they were able to raise some money, but yeah, it really devastated them. You read their story; it's a pretty sad story. So interesting cases. I don't know if y'all know any others. What when y'all think of frivolous lawsuits, there was one person, a woman in California, that if you lived next door to her, you would be sued. If you had your radio a little too loud, she was like, anything you did, and she was actually barred from doing any cases in California. She had so many cases, just anything you did. Your dog barked one time, and she's like, "I'm suing you for $50 million." So there's probably some almost that egregious, but all right. So let's say you are sued. What are your defenses? So you're doing something where they knew it was dangerous. They're doing it with you, and that's kind of the acceptance of the risk. Contributory negligence, they were also negligence. So that's no longer a complete defense, but it will reduce if you were part of it. So your actions contributed to the losses, then it's up to the jury to figure out how to proportion that. If you as a plaintiff could have stopped everything, but you chose not to, you kept the process going. So you knew there was risk, something bad was going to happen. You could have just shut it all down. Instead, you just kept going because you're thinking, hey, if I get damaged, I can sue them. Then the defense is protected from that. So you had the opportunity to prevent the loss, but you chose not to. The plaintiff can show that his negligence had been spent, and the defendant had a last clear chance to avoid the injury. So if you're negligent, you got to kind of prove what you did, when it stopped, and they have to kind of decide, did your stopping, was that enough, or would it continue anyway? So the jury has some subjective things they've got to figure out. You can't sue someone if it's illegal activities. So if you're a drug dealer, none of y'all have drug dealers, but if your drug dealer sells you some really bad cocaine or whatever, I know nothing about drugs, you can't sue them for negligence. So intentional, if it's libel or slander in the US, if it's the truth, you're off the hook. In the UK, I don't think that's true. In the UK, it's a little bit different rules. There's been a lot of economist articles on this, so it is a little dangerous. And the reason you see that is there's people that will go to the UK that are used to US rules, and they'll say something, they'll get in a lot of trouble. They'll say it's all true, and they say, we don't care. You can't divulge that information. Obviously at the very end, you just proved that you as a defendant were not negligent. And there is some prudent person rules here. You did everything that a normal person would have done in this situation, and the loss still happened. You're off the hook. You're not responsible for acting more heroically than anybody else. This is not the same as the prudent expert rules. So prudent expert rule is if you have extra training, you're a doctor or you're a lawyer or you're a portfolio manager, they're going to ask, did you act in a way that was consistent with your profession? So that's not general. We're talking about general liability here. If you're an expert, we're talking about professional liability. The rules change quite dramatically. And so these things you have to prove. So I think I have. I didn't do the Carol Burnett case. Let me show you the Carol Burnett case. Y'all don't even know who Carol Burnett is. But everyone my age knows her very, very well. Let me put it in. Who's never heard of Carol Burnett in here? Anybody? Wow. National Enquirer, y'all heard of National Enquirer? Are they still in business? How can you sue National Enquirer when it's pretty obvious most of the stories are fake anyway? But that's what she did. So she sued them. It's a very famous case because it really set up the rules for what famous people can do, and really set off some. You've seen a lot more of these recently, people suing newspapers and TV programs. Ruled that, let's see, in '76, the leading gossip tabloid published a brief column incorrectly implying that Carol Burnett had been drunk and boisterous at a nightclub, ran into Henry Kissinger. She was a campaigner against alcoholism. She sued them for libel. So here, she can show damages. Here she is, someone out advocating against alcoholism, and they have this story about her being drunk in public. Obviously, this is not just damaging her reputation, but actually making her look like she's got, some inconsistency. Over several years, ultimately settling out of court for $200,000, though offering no witness to the defense. The Inquirer argued that it was exempt from liability on legal grounds from the First Amendment of the Constitution, freedom of the press, and I don't know, he can argue that was their opinion that she was drunk. She sought $10 million, but her attorney sued for $1.6 million. And actual impunity damage, however, presiding court reduced it to $200,000. The case was $200,000 was a lot of money in the '70s, so probably multiply that by 20. The case was widely regarded as a watershed event, and some analysts suggest that it might increase celebrities' willingness to sue tabloids for libel. So she was dining at this restaurant in DC. She drank 2 or 3 glasses of wine, but was not drunk. She exchanged parts of her dessert with diners after they became curious about it. Later, she was leaving the restaurant. She was introduced to Henry Kissinger, who was also dining in the restaurant. And this is what the Inquirer reported. A boisterous Carol Burnett had a loud argument with another diner, Henry Kissinger. She then traced feet around the place, offering everyone a bit of her dessert. She really raised eyebrows when she accidentally locked a dice of wine on over one diner and started giggling instead of apologizing. The guy wasn't amused and accidentally spilled a glass of water. So how much of that is true versus not true? Was she met Henry Kissinger? That part was true. So she got, a few $100,000. But the National Enquirer decided to take it to court and fight it. Probably cost them more in legal fees than it did the actual case. But now, since that time, they've got to stop and think before they write an article how much truth there is. If they could have proved it was true in the U.S., that would have been enough. That's all they would have to have proved, and they would have been off the hook. All right, let's talk tort reform. Just real quickly, what do we mean by tort reform? So I went back to George Bush Senior, not junior, I think. No, this is senior. No, this is junior. This is George W. Bush. George W. Bush. So during his presidency, tort reform was a huge issue. So I just want to show you some articles during that time, what they were writing. So what do we mean by tort reform? Y'all probably heard that phrase, tort reform. So what do we mean by that? One thing that I definitely agree with is contingency fees for attorneys. You see so many cases where the individual plaintiff makes a few $100s and the attorneys make 10 million. And we're going to talk about like class actions. The attorney's in it just to get their pay, where they're not really helping the plaintiffs much at all. Time limits, we're going to talk about that with asbestos. So you can't wait forever and ever to file your lawsuit. And then limit on punitive damages, you see that a lot. To some dollar amount or twice the economic damages. I'm not a big fan of either of those. I think there's some cases where the defendant is just so ridiculously bad that you should be able to sue them for a lot more than that. But that's what tort reform does. This is the one I really like. Essentially what it's saying, I don't like the way it's worded here, but essentially what it's saying is if you're going to sue someone, you can't look and see how much liability insurance they have and it'll add on top of that. Essentially you have to sue them assuming you don't know how much liability insurance they have. That makes sense to me. Otherwise, if you get $5 million of insurance, then they can sue you for 10 million because, you know, if your net worth is 5 or 10 million, whatever, they just keep piling on. And then here's what we talked about is, you know, if you're only 20% at risk, and this is big, we're going to talk about asbestos. If you're Walmart and you have a few stores with a little bit of asbestos in your ceiling that probably didn't cause any cancer, but the firms that produce asbestos are all out of business, then you sue Walmart because they had a little bit of asbestos in their building. They're saying, no, you can't just sue people because they have the deep pockets in the cash. They got to actually be guilty. So this is what the U.S. Senate was trying to do, but the U.S. Senate, they could not get anything worked. So then you see what the states were doing. You're going to see very similar type of things. One thing they're trying to do is not have lawsuits be like the lottery. So if you win, you're going to get paid out over many, many years versus getting one big cash settlement. Again, limiting contingency fees to some amount. I don't know how they came up with these amounts. This is California, but you know, they probably have more lawyers in California than anywhere else. Due to the steep increases in malpractice, we're going to talk about professional liability, but tort reform applies to both professional liability and normal liability. The reason tort reform is so important is there is a major problem with doctors and malpractice, whereas a lot of doctors were just getting out of business because the insurance premiums were just way too expensive. There were places you couldn't have a baby because there were no baby doctors. You had to actually go drive to Nevada or something. Florida was addressing it, cap non-economic damages like punitive damages. Why? Because doctors were refusing to do certain things. You know, what do you think is the most dangerous doctor position? Well, it's going to be a baby doctor. Why? Because you got the entire life and you'll find something. So Mississippi requires plaintiffs to file malpractice suits in the county where the injury occurred. So what they're trying to do is get around from jurisdiction shopping. We'll see that when we talk about class action. There are certain courts that are much more lenient than others. You should sue where the loss happened. Medical liability insurers are lowering insurable limits, and some are offering claims paid. We'll talk about this a little bit later. Essentially, the insurance industry is a lot like what we saw with mold insurance. From professional liability, we're just getting out of this business. It's getting too expensive. I don't know if y'all know any doctors, but you might talk to a doctor as we get into malpractice, how much their malpractice insurance is. If they're working for a hospital, it might be covered through the hospital, but you know, we're talking potentially $100,000 a year type of insurance premiums. You think doctors make $340,000 a year, but if 1/4 of that is going to premiums, that's pretty material. Southern Nevada has become the worst place in the country for women trying to find prenatal care. So don't go to Nevada. There's a lot of repetition. That's why these aren't highlighted. So yeah, it was a problem. This all blew up. States changed their laws, and since then it's been really quiet. So they either fixed it, or it was like the mold issue. It was a few headline cases, and it just kind of went away. But essentially, tort reform has not been. I don't think you've heard any politicians talking about tort reform at all. I haven't noticed any. It's not a big deal. But back during Bush's administration, tort reform was a huge deal, and he was very actively involved in it. All right. Let's talk a little bit more about tort reform. I'm going to show you another article from that time. You tell me if you want this to be your judge. Is she going to take any nonsense? I love the Bill Regan, the comedian, talks about the no nonsense judge, and he says, "I want the nonsense judge," and this is the no nonsense judge. Whoever is talking to her is not telling her the truth. I would want her my judge if the other person was talking. That time. All right. So this is old, but this is back during the same time. Why was tort reform such a big deal back then? And so just to give you some numbers here, the U.S. tort system cost $246 billion, or about $1,000 per person. Over the last 50 years, tort costs in U.S. have increased more than 100-fold. It's grown a factor of 37 versus the population's only doubled. During the past 50 years, growth in tort costs have exceeded growth in GDP by an average of 2 to 3 percentage points. You can just see tort costs versus our economy. But the question is it all tort or is it specific pieces? So here we're going to see a big shift during medical malpractice is the big one. At nearly 27 billion, medical malpractice costs translated $91 per person. So I don't know, in today's dollars, that would be maybe that's a couple $100. You're not going to solve healthcare costs by solving medical malpractice. So we talked about that some last semester in my life insurance class. It is material, but it's not solving this doesn't solve healthcare costs. Healthcare costs are up for a lot of other reasons. There are a number of social influences in the U.S. We like to sue a whole lot more. I used to have a statistic in California. I lost it, but the percentage of California auto accidents that go to court is just ridiculously high, or it was at that time. So that's why legislations were trying to fix this problem. So the largest single contributed rise in tort costs was the upper reassessment of liabilities related to asbestos. We're going to talk about asbestos. Do y'all know what asbestos is? It used to be like what you put in for, I can't remember the word, but in your attic for insulation. But it's causes cancer if you're around it materially. If you're just minor exposure, not. But people who are actually putting insulation in the houses are almost, very, very high probability of getting this cancer. But we do sue a lot. Reports of class action lawsuits by groups of insured parties against boards of directors, public trade companies appear. Class action is a big part of this. It used to be tort was people suing on auto insurance claims, one person at a time. What has changed and has really caused these costs to go up is the class action lawsuits, where one lawyer tries to find 2,000 people to sue with them. So directors and officers tend to be class action. Asbestos tends to be class action. Just to show you an asbestos as an example. Oops, where did it go? I lost the article. I didn't click off of it, I don't think. Oh yeah, here it is. So here's an advertisement. Back at that time, I've seen these on TV still. They're still going on. Mesothelioma asbestos lawsuits. If you or a loved one has mesothelioma disease is the result of being exposed to asbestos, may have the right to recover. Many of the responsible companies have set aside large funds.
I was gonna say this actually just made me like think about those sometimes commercials you'll see. Like it's like, have you been taking this medicine and been infected?
Oh, well, what's the one right now? Yeah, I've seen in the news. Roundup, have y'all seen that? I've seen a bunch of those. Have you seen that on your Facebook? But yeah, I mean, medications. So this is Bayer, isn't it? Bayer Corporation. They bought this firm. Yeah, I don't know what's the main medication you might have seen.
It was just usually on TV. It's like, have you taken this medication and had this and developed this where it's like, call us and let us know and we can get you like settled. Yeah.
Is that the same as the Camp Lejeune when that's going around? Is that?
Oh, I've heard that before. I'm not sure. So, I mean, that's the class action, right? They're trying to get, and we'll talk about the class, the key with class action is really hard to defend. So if you're defending against one person, yeah, you can go in there and fight it. You got 2,000, it becomes much more difficult to defend. You tend to just settle. That's what the lawyers know.
I think he's all about, I know there's like some stuff with construction, little work with construction, like, it's like, I don't know what it is, but like, it carries like cancer.
Yeah, so people are looking at that, right? People are worried about, I've seen more articles about the iPhone causing brain cancer. I don't know what the data is, but if it's true, that's a pretty good deep pocket to sue, isn't it? So if we can find that children, is it, well, let's look it up. Everything's out there on the internet. Did you use Roundup? So cancer from iPhone. Cell phones and cancer risk fact sheet. If that becomes a case, yeah, Apple could be sued, big lawsuit. So I don't know. It makes you, I mean, these things scare you to death, right? I sleep with my phone next to my head on when I sleep because it's my my alarm. But yeah, here they are, and they're talking about the statute of limitations. You can't, like, it's key. We're going to talk about this. What does the statute of limitation apply to? When you were exposed, when you got the cancer, when you discovered you got the cancer. So those are all the questions they have to ask about. So let's say someone's diagnosed with cancer. When did the statute of limitations start? If it started when you were exposed, that could have been 50 years ago. If it started when you got the cancer, that could be 5 years ago. So we have to say, when does the clock start running? And that's why the claims made, you saw that in that one place, that's the most limiting of all. So it's real key. And the problem with some of the people working in this, so like Jalen, you're talking about in construction, if you worked in 20 different sites, which of those sites caused you the cancer? If they all had the stuff. Well, what do you say? Well, who has the deepest pockets? I'm sure that's the one that exposed me. So you want the people who actually have money to be the ones you sue. And then who's responsible? So that's the other thing. If you have mesothelioma, that alone is not grounds for damages. You have to, it must be established you have been exposed to a specific asbestos product at a specific location. If you do not remember, come to us and we're going to help you. So lawyers are saying we have experience with this. So we're going to talk more about asbestos because it's an interesting case. It's real similar to the mold case that we just hit all at once. All right. So yeah, we'll get into that more. Oh, sorry, I got too many things open here. All right, so let's get into asbestos now before we get into professional liability. I can't remember where I talk about. Yeah, let's jump asbestos now because we're talking about it. So I got a couple articles out there. I want to use this one because it was written right in the middle of the issue, so it's a really good article. I don't know if it bothers you. I use old articles, but I love articles that are written during the eye of the storm because it gives you a good sense, especially for the actuaries. This is an industry that insures some things that just blow up all at once. And it happens a lot. So I like to show, if I can find a more recent case, I'll keep looking. So asbestos was widely used in products for decades. At least 27.5 million people have significant occupational exposures. With asbestos, shipbuilding, construction, and tens of millions more were exposed in other industries. You see who wrote this? American Academy of Actuaries. They have a mass torts subcommittee. So we should go try that out. You think that's still in existence? There it is right there. Overview asbestos issues and trends. That was 20 years old. So maybe it doesn't exist anymore, but it still has a link. Did we have the internet in 2001? I think we did. All right. Okay, let me get back to the article if I can find it. So I conclusively linked to medical conditions. So very different than mold here, where mold is a little questionable, ranging from pleural changes with no signs of impairment. That's really critical here. Because you're gonna see with asbestos, people with no medical conditions whatsoever are getting compensation from for these claims. 2, fatal diseases, including lung cancer and mesothelioma. Average, this is real critical too. This is a big part of this case. Average latency periods can vary, ranging from 10 to 50 years. So you can be exposed in 1980 and you don't know you have cancer until 2030. That's a huge issue for insurance companies. Because you got a company that's probably insolvent, but had an insurance policy, and who's responsible, so this is really, really tough insurance. An individual victim's disease is typically attributed to exposure to multiple products over decades of use. So this isn't like you're in Walmart and they have asbestos in their ceiling and you're breathing in the air. It's got to be more than that. It is virtually impossible to isolate a specific exposure. As a result, a single claimant typically files suit against 60 or more defendants. Thousands of companies have been named as defendants. Some were major producers, which are obviously all out of business now, and others were more peripheral involvement. RAND, I don't know if you heard RAND Corporation, they just really, really good think tank type of studies. They found that 730,000 asbestos claims filed lawsuits through 2002 against more than 8,400 claimants. The report states that the number of claims filed annually has increased sharply into the 90s. Claimants with this is really key, claimants with non-malignant injuries. That doesn't mean they don't have some problems. It just means it's, they can get treated and be cured, account for most of the growth, and some evidence suggests that most of the non-malignant claimants are currently unimpaired. So people who don't have any serious problems are getting the majority of these claims. They found at least half of the $7 billion of the claims paid to defendants and their insurers were related to non-malignant conditions. So notable changes, more efforts to direct scarce resources. So this is one thing, talk about tort reform, is there's people who've really been injured. Those are the ones that the lawyers are fighting the most because the claims are the largest. And there's people who haven't been injured all that much. The lawyers are just settling those because they're smaller. And so what's happening, the people that are least injured are getting the money and the people most injured are having to fight for their claims. And tort reform says that's backwards. We should be paying the people who are the sickest, and we need to kick out these frivolous lawsuits. So that has caused a decrease in the filings of the least severe medical conditions. And there have been fraudulent claims. This is something that the Wall Street Journal picked up and actually wrote some articles about these fraudulent claims. I think we'll see some of that in here. Talk about the media exposure. Here's media exposure where a newspaper, a pretty well-known newspaper, called out these fraudulent claims and got some pretty good traction from that. This is the firm that's most famously associated with this. They were the largest manufacturer of asbestos-containing projects and the largest supplier. Obviously, they filed for bankruptcy, but they set up a trust. Now, who funded this trust? So that's going to be really, really interesting. The company did, but they're bankrupt. But they also had an insurer. So the insurer is insuring them and setting up this as well, which was formed to distribute the assets among current and future asbestos claimants. And it started paying in 1988. Many believe that the increase in the claims reflect greater medical awareness and diagnosis, as well as increased claimants' propensity to sue. Now, what do trial injury lawyers do? This is a gravy train, right? They see this, it's successful, they jump on, and they're looking for anybody. I mean, you can't blame them, that's their livelihood. So they're jumping. I'm not saying they don't care about people's lives and helping them, but at the same time, they're getting great compensation from doing this. Asbestos is dose dependent. We just talked about that. So serious claims might decline in the future, reflecting why, because we're not using asbestos as much. Some non-malignant claims are life-threatening, so not all non-malignant are minor. Most claimants with non-malignant do not exhibit any impairment. The non-malignant claims are generally influenced more by litigiousness and recruitment efforts through media advertising and mass screenings, just like we just saw. Many other major asbestos products have declared bankruptcy. The asbestos litigation system has been an inefficient mechanism for providing compensation. Defense transaction costs consume 30%. So 30% of the money is going to lawyers on the defense side. 29% is covering plaintiffs. So we're up to what now? $59% is going to the lawyers. So what are the people with cancer getting? They're getting 49%. I hate that part of our legal system. And other legal costs, only 41% of total spending reach claimants as net compensation. Whose fault is that? Part of it's the defense. They're spending a bundle, but it's also the plaintiff side. So how do you fix that? You saw the tort reform. You're trying to limit contingency charges. What if you limit contingency fees? Well, then fewer lawyers do this, and then the claimants don't have a, so how do you handle this? And yeah, I don't know the answer on that. As a result of these reforms, asbestos litigation in these states will likely change to be more individualized process. So again, getting away, and that's a big part of tort reform, getting away from the class action. Tighten restrictions regarding connection between the plaintiff and the venue of the case. You can't shop for your venue. Relate to innocent sellers like someone, it's just incidental. They didn't know, there was no true negligence there. In caps on non-economic and punitive damages. So more and more tort reform here. Plaintiff attorneys and asbestos in these lawsuits have tended to combine large number of claimants in a single lawsuit, making it difficult and costly to defend because they're not going to go into every single defendant and look at the data. Many of these claimants have been diagnosed through mass screening programs. Remember that. How reliable do you think these mass screening programs are? First of all, they're incentivized to find something. So when you're incentivized to find something, guess what? They find stuff. And so recent events have cast considerable doubt on these diagnoses. A study published in this article called The Diagnosis of Some Physicians in the Question. So they went back and had independent radiologists look at 500 of these cases. The independent found abnormalities in 4.5% versus the original reading was 96%. I don't know if y'all see a difference there, 4.5 versus 96. It is highly unlikely. And the other thing they found is it's unlikely someone's going to have both silicosis, I don't know how to say that, and asbestosis. It was found that some doctors had diagnosed individuals with both, and then more than 50% of silica claimants had previously found asbestos claims. Judge Jack, I think this Judge Jack is a female judge. She's the judge that the Wall Street Journal fell in love with because she started contesting these things. So like we got fraud going on here. She's starting to threat. So you would have found some Wall Street Journal articles back that time were just very pro Judge Jack. These diagnoses were driven neither by health nor justice. They were driven to manufacture money. Her decision is likely to lead to higher medical evidence standards, which you think that would have been the case already. The impact of this heightened scrutiny in conjunction with stricter medical criteria adopted by some states in the form and inactive dockets or legislation might lead to fewer mass settlements. So again, tort reform. When does tort reform come? It's after the trial lawyers have already jumped on the bandwagon. It's kind of gotten out of whack. Firms are just going out of business. And then courts finally say, hey, you actually have to have medical evidence that you've been injured before you get a claim. So this was a big deal. You can see some of the kind of the data of how large some of these things are. Here's the companies that got sued, and when they went bankrupt. You probably never heard of any of these firms. A lot of them are these kind of smaller construction type of companies, more mom and pop than a major publicly traded companies. What states you saw the claims? You can see Texas jumped in here pretty fast. I don't know why California came down so much, but yeah. So what is currently going on with this? So here's an updated, a little bit more updated article, but again, right in the middle of this George W. Bush presidency, 2 decades ago, analysts predicting that the litigation was going to cost about $1 billion. Now they're saying 38 billion. It's already passed 54 billion. Now they're starting to say 210 billion. So we talked about Warren Buffett. Do you think Warren Buffett has anything to do with asbestos? Is asbestos something he would want to insure? Warren Buffett takes on CNA's asbestos risk. So CNA was the insurance company that had the largest asbestos claims, and it was a disaster for them. So a friend of mine, he covers CNA because he's an analyst for the insurance industry, and he said 1 year the CFO came out and said we added, I forget what, 5 billion to our reserves, and that's the last time we'll have to strengthen reserves. And then the next year they added another 5 billion. It's one of those things where the problem is getting larger and larger. So CNA to pay Buffett's $2 billion fee, CNA expects to incur $375 million loss. What is Warren Buffett taking in all of this? Buffett understands the insurance risk well and can use the float, if you heard that word before, from the $2 billion to boost investment returns before any claims would need to be paid. Took on some loss for equity affiliates of Lloyd's of London's. So yeah, so Warren Buffett stepped in. Do you think he knew what he's doing in doing this? You think he studied this some? So, it's interesting. He took this off the book of CNA. CNA was really struggling. This is pretty recent too. When is this article? Oh, not that recent. Man, I'm losing track of time. So 13 years ago. But yeah, so this is, but 7 years after this was all blowing up. Claims for mesothelioma and other cancers have stayed roughly constant over the last decade, but suits for non-malignant have jumped dramatically. In many cases, plaintiffs show no evidence of injury. Forbes magazine, asbestos defendants are very likely now paying compensation for every occupational disease known to man. Anything picked up on X-ray bears at least a superficial resemblance to any kind of lung inflammations. The potential for a huge payday impels trial bar to find claimants, irrespective of the validity of their claims. Even some plaintiffs now recognize how they've been used. Last year, more than 2,500 litigants actually sued their lawyers. I always love that when trial lawyers are sued by their customers, charging them that their clients as mere inventory that could be generated enormous legal fees. Now, I'm not sure what damages they had because I don't know what it really required of them other than helping with the paperwork. 2/3 of the dollars went to these type of cases, even though many, if not most, were not sick in any meaningful sense. That's 2/3. We already saw 59% went to the lawyers. 2/3 of the remaining is going to the people who aren't really all that sick. Another problem is that the search for deep corporate pockets hits companies with no responsibility. Why? Because the firms that are responsible are all bankrupt. These defendants now account for $6 out of $10 spent on the litigation. Strategies include insisting on proof of injury. That seems like that should have been obvious from day one. Ensuring the reliability of medical evidence, making sure it's really asbestos related and they're not just getting sued for every medical condition, and limiting punitive damages. Yeah, here's something from the Cato Institute. It has some similarities to mold. I think the most interesting thing, if I were an actuary in this industry, you're seeing something you don't really see on the life insurance side. These issues that come out of nowhere to become massive, lose the insurance industry like CNA, just billions and billions of dollars. You don't usually see that on life insurance side. It's not like so many people start just dying. Even COVID was not that big of a deal for life insurance industry as these type of issues are. So if you're an actuary, the P&C side has these type of issues, the life side doesn't. So, kind of pick your poison. The P&C obviously hires a lot more actuaries, so there's a lot more opportunity. All right. So I gave some notes here. We talked about the tort update. I want to go back to that tort update article just real quickly. So asbestos and medical malpractice were the two driving forces for tort reform. Today, what would it be? We'll look at some examples today that might be there. There appears to be a shift in the type of liabilities from individuals suing to these groups of plaintiffs suing corporations. Claims against pharmaceutical companies, so this is what you were talking about, Johnny, effects of certain drugs. There have been some attempts to sue McDonald's. I don't think they're too successful. I don't think there's ever been a successful one. Unless McDonald's has exposed the consumers to high levels. Now that could be something specific in the food, but we're talking about the fact that their food is unhealthy. People are gaining weight. Can you sue them for obesity lawsuit? How successful? I don't think any of them have been successful yet. And what would McDonald's argument be?
Stop eating.
Yeah, we're not forcing you to eat this.
Yeah.
You should know that it's risky. I mean, you can make the argument today about smoking, right? Someone starts smoking today, can they sue the tobacco company? Well, you have to say, well, who doesn't know that there's a link? Back in the 70s, maybe not, or 60s. But I don't know if y'all remember the time when, well, y'all don't remember, but there used to be time you could smoke everywhere. I used to love to go bowling, but you go to bowling alley, it was just full of smoke and it just killed your eyes. I remember at UT Austin, you couldn't smoke in elevators. I remember this one music student took a big puff, put his cigarette away, walked in the elevator, the doors closed, and then he exhaled. We're all in there like, oh, thanks a lot. So, yeah, you can't really, I don't know if there's lawsuits today for people who started smoking today, but, that's kind of the thing is what's driving markets today. And so what this article is saying, that's a potential future one, but I don't think it's been successful yet. At the time this article was written, they were talking about. So tort reform is coming out at this time period, seems to have worked pretty successfully. So what is a tort? We already talked about that. It's a wrongful act other than a breach of contract. And it can't be illegal. The study examines only one side. So what this study is not showing is the benefit of tort reform. Those things that, the downside of tort reform, or I guess the downside of tort, is things that we don't do anymore because we're worried about being sued. So we used to, when I was a kid, we used to have something called the merry-go-round on cool parks. You could get that thing going about 80 miles an hour.
Yeah.
And you hung on for dear life. My brother was a bodybuilder. He could get us going to like 120 miles an hour. And you were just like, please stop. It was pretty dangerous. You don't see those anymore. Although I was in Seattle and they had one. I was amazed. They had this one ride that was so dangerous. It's like, how in the world are you doing this? It was fun, but it was really dangerous. But yeah, so they're talking about, that's the additional costs of the tort system is these things we no longer do because we're worried about being sued. I think there's a few more things I want to do. Yeah, so you have commercial side and personal side. So it used to be all personal. Now it's commercial is taking over. All right, I want to get into this part here, but I don't want to start it here. So I want to start this part. There's some terminology in here I want to cover, like ALI and ULI, actuaries especially, you know what these things are, and just the components of it. So we'll start here. So any questions on anything? So Wednesday night, I might, hopefully I remember, start talking about your paper too, all right? So my thought process is a little unusual. My thought process is I'm going to give you a list of topics, and I want you to pick your topic Since in groups, it's not a group project, but I want like 5 people doing this topic, 5 doing that topic, all right?
Oh.
And then we'll take a class, not this week, but we'll take a class where we're gonna, well, maybe next week, maybe next Monday. You bring your laptops, and once we have your topics picked, I want you to research in class to find key articles for that, all right? And then you can share the articles, but then you write your own summaries. Is that making sense?
Yeah.
And then late in the semester, I want y'all to come in and summarize what you learned. It doesn't have to be group presentation, but you might do a little bit of coordinating. So we'll talk about that more on Wednesday and next Monday to get into it, all right? So you have to write your own paper, but you're going to help each other out finding articles. So, all right, I'll stop it there. Finish up just real quickly on this article because there's some good terminology in here. So insurance doesn't have cost of goods sold. They have something else, which is all the costs related to claims. Not everything related to claims goes to the customer. So we talked about loss adjustment expenses, and even loss adjustment expenses have categories. So let's look at some of this terminology. So the costs this study is looking at are those things that are directly paid to people because they sued and they won. It also includes their lawyer's costs, but there's also some admin in there. Now, have y'all ever heard this term incurred basis before? It's a pretty insurance term. So in insurance, when they have a claim, there's a claim that they pay in cash, but there's what's called an incurred claim, which if you think about in accounting, is like an accrual. So they may not have paid the claim yet, but they're responsible for it. So the incurred claim is what they think they're going to have to pay out eventually for something that happened this year. So they incur it this year, but they may not pay it until next year. So they're saying they're doing this essentially on an accrual basis. Incurred claims requires some estimate because the actuaries, you don't know exactly what you're going to pay, but you have to put it into this year. And so when they set up their reserves, there's some estimates that they have to put in that hopefully are pretty accurate. You saw some of that when we read the Warren Buffett paper about discounting of reserves and how reliable reserves are. But actuaries have a huge impact. We're going to see it when we look at Schedule P, just how huge the impact is. It's quite material to the earnings reported by the firms. All right, so the defense costs is where it can get a little tricky. There's defense costs that are direct, related to the claim, related to the investigation of the claim, related to lawyers hired. And then there's general claims handling costs. They have what we call ALI and ULI. ALI are those more direct costs that are directly related to claims. ULI are other costs that are somewhat allocated. So you might have the head of legal be overall the legal department, and maybe 40% is related to claims and adjustments, 60% is not. So 40% of that person's salary is going to be allocated to ULI. Actuaries do this as well. So there's somewhat, you think accountants do a lot of this stuff, but in an insurance company, actuaries do a lot of the accounting. And so they have to split that ALI and ULI as well as the reserves. Administrative expenses reflect expenses other than defense costs incurred either to the insurance company or some entity in administrative of torts. So they're kind of hinting that some of the costs they're showing in here might be accounting costs that don't really reflect the true costs of the tort system, but most of them are going to be pretty important costs. I think that might be it. No. Yeah, we kind of talked about this last time. I got a little ahead of myself last class. So the indirect costs are omitted, and those are the costs that litigation causes people to avoid doing certain things because they're worried about being sued. It could be doctors ordering extra tests just to make sure, which is not really needed, but it's a waste of money, but you don't get that cost in here. doctors are worried about malpractice, and so they'll order more tests than they need, or they may have someone stay in the hospital an extra 3 or 4 days or whatever they need to avoid litigation. Those are costs that go to society that are not in this study. The disappearance of certain products, as we talked about last class, our whole industries leaving the industry because of the liability costs. Those costs are not in this report. There was, yeah, this is an interesting chart. It's just so out of date. I wish I could get this chart through 2022 or 2023. It'd be really, really interesting. But they're just showing you the data of tort over time. And I think in one place they even broke it between, they don't only here, but they break it between commercial and personal lines, which is huge because you saw a lot of the early tort was auto insurance related, and then later it's the medical malpractice, the asbestos, the directors and officers type of thing. So it's definitely changing. So I wish I could tell you what's happened in the last 20 years, but they haven't updated. They all recognize the name of this company. You actuaries know this firm? Powers, Perrin, Tillinghast, and now it's a bunch of others. I don't know where they keep merging. Here they are. If I were an actuary, this is where I would want to be. So, Tillinghast used to be separate from Towers Perrin, and I can't remember who else they purchased. It's like 6 or 7 firms have come together. They may even tell you here, boy, they go way back in their history, don't they? This firm's been around a while, hasn't it? 1828, my word. So they must have had actuaries in 1828. Let's see. They acquired them. They're here, the Wyatt Company. So Watson Wyatt was a big actuarial consulting firm. They became part of this. I don't know when they bought Tillinghast. So Towers Perrin and Watson Wyatt completely combined, not just partial ownership back in 2010. Where y'all see where they bought Tillinghast? I don't see it in there yet, but you can see they acquire a lot of firms. So look at all those names that they have. So I don't even see Tillinghast in there. So Tillinghast used to be a premier. I know Tillinghast because we worked a lot with them at USAA. But these are essentially the actual firms for consultants. It's kind of like the big 8 or whatever, big 3, the accounting firms. This is the big firms for actuarial majors. You probably wouldn't start there. But if you could, we've had one student, oh, I can't remember the name of the firm she went to. She's come back to UTSA and spoken. She was an actuarial major. Oh, I can't remember the name of the firm, but it's an actuarial firm in Houston. And I didn't think she had a chance because she didn't have any of the exams. And I didn't think they would talk to anyone without exams, but somehow she got the job without any exams. And so when that firm comes to hire, I like to let the actual students know because it's another impressive firm. I just can't remember the name of it. They hired one of our actuaries from UTSA. I got to see him 2 summers ago when I went over to Houston, doing really, really well. I wish I could remember the name of the firm though. But there are some actual, I don't know if y'all knew that there's actual firms out there. They hire a bunch of actuaries and do a lot of consulting work, make a lot of, they're great places to work, very professional organizations. Anyway, so that's their study. They just haven't updated that study in some time, and I wish they would. And one reason that they updated it is we talked about, this was a huge, huge issue during Bush's administration, and then it's been solved, and so it just hasn't been an issue since. So my focus on all of this with asbestos and tort, medical malpractice, is how these waves of issues come in and attack this industry, become just almost destructive to the industry. The industry says, hey, we're not insuring anyone anymore, and that fixes the problem, and there's reforms, but it's just the nature of the P&C side, and it's not the nature of the life insurance side. Let's real quickly look at where we are the notes. All right, so let's talk a little bit about professional liability insurance. You mainly think about doctors on this, but it applies to anyone that's a professional, viewed as a professional. It can be on the investment side, it can be actuarial, engineering, anyone that's a professional, and they make a mistake, make an error, make a mistake or leave something out that they should have done, they can be sued, and you have to buy insurance for that risk. I mean, malpractice isn't just medical malpractice. Everybody can be malpractice, errors, mistakes. And so the real trick with this is, when are you covered? Because a lot of these things have very, very long latency periods, especially a doctor could do something that may not be discovered for 5 or 6 years later. So the question is, who's covering you? Which insurance is covering you? So the general rule is the risk happens when the person was injured, even if you don't discover it for 6 years later. So that's the exposure doctrine. The manifestation doctrine, it just says you're not liable until they discover the injury. That's not going to be very common. The claims made policy is kind of the manifestation doctrine. We saw that in one of the articles, which says, you know what, we're only going to cover you if you made your mistake while we were insuring you and the claim was filed while we were insuring you. If either one of those is out of our insurance coverage time, we're not covering you. And there's a retroactive date. So most insurance will have this that says, so we'll cover you, but we'll cover you for anything starting in 2015. And if you started doing surgeries in 2010, then what are you going to do in those first 5 years? But I talked to some doctors and they say this has never been an issue. The retroactive date for most doctors will go back to when they started practicing. But that would be an important date, because you're not sued. I mean, you're sued based on actions you took, no matter how long it takes them to figure out that you're the one at fault. So this retroactive date will be in the contract, even whether you're a doctor or a lawyer or whatever you have. Is like, okay, how far back am I covered for this policy for actions I took? All right. So how many of y'all should have professional liability? Probably most of you are going to get it from your employer. You won't buy it yourself. So if you're working for a big firm, but if you start your own firm, you're going to have to get this. You're going to have to buy this product, and make sure you understand what it's actually covering. I've dealt with some people who are like preachers who do a lot of counseling. Well, you can get sued for a lot if you do good counseling, but they're not professional counselors. So are they acting in a way that's going to get them sued and to get their church sued? They love to give advice. They say, no, don't divorce your spouse, stay with them. And then that spouse ends up doing something horrible. It's like, okay, that's pretty bad advice. So you always ask these questions. What if they give bad advice? I've had those discussions with people. It's like, are you exposing this entity to your mistakes that could bring the entire entity down? Now for me at USAA covered me, but I had no control over how much coverage they gave me. But they would give us the contract every year and tell us what the coverage was. So that was always interesting to me. I may have told y'all this, but I can't remember. But I just remember at USAA, this one board I was on, the professional liability, where the directors and officers, they would present that policy once a year. And that was about the only time the whole board was really engaged and asking questions and talking. It's like they didn't care about anything else. It was like the one time it had to do with them personally, like, hey, how much coverage do we have? Is that enough? What does it cover? And suddenly they all started talking and getting involved. Be careful on this. If you're a professional and you're putting yourself out there as a professional, any mistake you make, in that line, you can be sued, and you can't just rely on general liability to cover you for that. This is a very special type of coverage. But you can get general liability coverage that protects you against liability arising out of the premises and operations on or off your premises, covers bodily injury, property damage, defective product or service of the insured, covers personal and advertising injury liability, false arrest. What is false arrest? What's the difference between false arrest and kidnapping? You know, one might be legal, one might be illegal. If it's legal, then you can still have a liability and be, you know, so you're retaining someone for some reason against their will, and you have to have damages. What damage you do to them because you retain them. Malicious prosecution, wrongful entry or eviction, libel and slander. Which one is which? Y'all remember? So the way I remember it, slander starts with S, which is, so does the word spoken. That's the way I remember. I can't think of a word that starts with L that goes with written. Maybe legible. But libel is written, slander is spoken. That you can certainly be sued for. Privacy. So yeah, medical payments, pays medical bills for accidents on or next to premises arising out of your operations. So that's general liability. Very, we're not going to go in detail because it's very similar types of stuff that you see with homeowners insurance. The one key is defective product. Most insurance doesn't cover defective products, especially like repairs and replacement, like a recall, an auto recall. Insurance is not going to cover that. That's going to be a cost of doing business. You're really talking about, you know, you produce a copier and that copier blows up when someone who's using it is that kind of thing. But if you're producing cars and there's something wrong with all the cars, that recall is not going to be covered by insurance. All right, we covered this article pretty well. Covered that pretty well. Covered that pretty well. We didn't talk too much about IBNR. I think we covered everything else in that article. But again, IBNR, incurred but not reported. It just shows you how precise actuaries are. They have to put into reserve a claim that no one's told them about. Now, the most difficult is health insurance. I mean, you won't believe this, but this is true. Actuaries on the health insurance have to set up a reserve for someone who has cancer, but they don't know it. The doctor doesn't know it. They haven't been diagnosed with it. They have to set up a reserve for that. Sounds pretty impossible, but they just have to look at history and try to figure it out. So nobody knows this person is going to have major medical bills, but their liability starts when the person gets the cancer, not when the doctor diagnoses it. So that's what IBNR is. You don't really see that on like auto insurance or life insurance or even really homeowners insurance, but you might see it on the liability side. Definitely see it on the health insurance side. We'll talk loss ratios a little bit more when we get into the accounting. Yeah, this is still getting into the article. Covered that article pretty well. I don't know why I do this, put summaries of the articles into the notes, but if y'all need a review, you can certainly. So that's a review of that asbestos article. All right, so I think we've covered it. So I'm going to put. I want to have a discussion, and whoever the participants are, Alec, Johnny, and Mitali, y'all might want to unmute and get into this discussion. So what we're going to do is talk about paper 2, and then on Monday we're bring your laptops. So I really need everybody here on next Monday if possible. So what I want to do is give you some topics. There's about 20, 25 people in the class. I'd like to have 4 to 6 on each topic. These are the ones that I've been thinking of, but we can add some others. I mean, part of it is you go out to a place like IAHS and go out to their site and see what they're talking about. That can certainly be a good source. So that doesn't look right. Probably not .com. I think that's it. I don't know if the HLDS, but you know, you can go to their site and see impaired driving. SUVs pose greater risk to walkers. You know, there's some pretty specific topics. So what our goal is to get the topics we're going to research as a class, get 4 or 5 or 6 on each topic. And then on Monday, we got to find the articles that you're going to read and summarize. And you're going to do it individually, not as a team, but we will come back together as teams to report out what you found. So let me talk some that we've used in the past. So this first one I find pretty interesting. This is one where IAHS would be really helpful. So car advances, road advances, the past, what's the most current ones today, and then expected. So past can be seatbelts, airbags, roundabouts, those type of things. The present, to me, it's the driver assisted stuff. There's a lot of that driver assisted, which is really, really key. You could even go beyond that and talk distracted drivers. I'm not really thinking it here, but maybe that would be part of it. And then expected. Expected is autonomous vehicles, you know, that kind of the ultimate, we get rid of the driver entirely. So what is the impact on the auto insurance industry? And that's going to really be directed by what's the impact on the driver. And by that, I mean frequency and severity. Are these things? So we talked a little bit about roundabouts. How much are they reducing accidents? And we said it mainly reduces severity. That's the key because they slow people down. And what have airbags done? Now we know with airbags, and you can certainly get into this, airbags should reduce severity, you would think, right? Doesn't really impact frequency, but airbags also cause major damage. So what's the balance between those two? So you've seen the warning signs about having small people in the passenger seat and the impact that has. So there's a lot of places you can go here. IAHS is going to cover those type of things. So what's the impact on frequency? What's the impact on severity? The next one is always a popular topic because there's so much out there on it. What is global warming actually doing to property insurance? It could be a US focus, could be a global focus. What numbers have we seen? And this, you know, kind of rethinking current and expected. So what kind of things are we looking at here? So you got drought, flood, heat, hurricane, strength. There's probably some others. And what is the impact? And you're again, guess what we're looking for? Frequency and severity. You might think it's all severity, but it's not. If we're gonna have more storms, and if we're gonna have bigger storms, is it both of those? Which of those is going to be the focus there? So there's plenty of stuff written on this. This is where you go to sites like RMS. Now owned by Moody's. Moody's owns everything. So they're going to talk a lot about global warming. It probably climate change. I have a whole section on climate change. So that and air, the other big modeler, would be a great site to go. For you actuaries, the fact that you're going to these sites and reading, I think it's going to give you a good advantage in interviews because I don't really expect undergraduate students to be getting into that kind of depth. So, you know, they're good topics to talk about. We'll talk about wildfires. You know, in California, you're seeing the mudslides, the wildfires. You know, it's just everything going on that's being driven. This one I think is interesting. We haven't had a student yet write this one yet, but the gig economy, y'all know what the gig economy is. So it could be Airbnb, could be Uber. What else is there? It could be delivery services. Now, DoorDash or DoorDash deliverers, are they DoorDash employees or are they self-employed contractors? Y'all know? You can Google that. Do DoorDash workers work for DoorDash? Is DoorDash one word or two words? So you can certainly research that. There's something in DoorDash and other apps is that orders placed. Well, yeah. So you'd have to figure that out because that's gonna be pretty important. Because if they work for DoorDash, who provides their insurance? It'd be DoorDash. Who provides the auto insurance for an Uber driver? It's not going to be Uber. So, so who gets that? So, and this is one place where Buckle could be an interesting place to go, even though they may be going out of business. They may be out of business already. So, so I don't know where they are. The reason I know they're out of business is one of our former students went and worked for them. And then he said, "Hey, I just lost my job. They're laying off. They're going out of business." So I don't know where they are now, but that was their big thing, is ensuring the gig economy. Mm-hmm. Now, as a team, you might say, let's like half of them talk about Uber and delivery service, the other half Airbnb, but you might not have enough to split it up. So you might do all of them. So if you rent out your place at an Airbnb and the people staying there do major damage to your house, or there's something in your house that causes them major damage, your homeowner is not going to cover that. So who is going to cover that? How do you get a separate policy? Who's going to price it? Who's going to sell it to you? And that was the ideal behind Buckle is, hey, this is unserved market. We need to provide some services there. So there's a lot to work out there. This one I find really, really interesting. We talked some about this, AI and telematics and the impact of auto insurance. So I showed y'all Root before. Their site give you some really good insights. And I had that podcast that I could probably find again and get to you. The Unreasonable Pork podcast, whatever that was. We could find that. It was a really good podcast. It's a few months old, but it's still very, very timely. Now, here's where I really love students that get involved. I was so shy when I started my career, and it made me excessively aggressive because I was scared. I was so shy, I was scared I wasn't being aggressive enough. So I would read an article and I'd call the author. That seems pretty crazy for a shy person, but I just started doing that. And guess what they all did? They all talked to me. I never had any, I had one economist got really mad at me, but he still answered all my questions. So, I would love someone getting that podcast and finding a guy on the podcast and saying, "Hey, I'm writing this paper. Can you send me some articles and information?" People love the college student sob story. It just, it tugs at the heartstrings, and they used to be college students. Plus, if you're an actuary, you do that, you might create a network for a job. So Root is the AI company, and so it's a really interesting area. They do a lot of telematics, but telematics includes AI. And so, it's kind of tied together with that. This one we haven't had anyone do, but I think there is a story out there, is catastrophe bonds, the history, what's currently going on, and behavior at the extremes. So we can see if we can get on Bloomberg. I'd be willing to help the team find a good cat bond, go out there on Bloomberg and see how that bond behaved when we had a hurricane out in the coast. We also maybe, so one thing to think about, USAA has hired a couple of our grads. And one of them came to UTSA. Did y'all come last semester, right? To we had that USAA day. So I forget the guy who came, but one of the people that came from USA was an USA actuary. So it's possible we could ask them if there's someone that, USA doesn't want to talk about cat bonds because they're pretending like, hey, we don't do this. We're just buying reinsurance from this other company. But maybe someone would be willing to talk about that, get some inside scoop, or maybe be willing to give us some articles we could see. But we might have some contacts there that could help us. Be a fascinating discussion, and there are a lot of articles out there on this. So you want to include in this compared to reinsurance, because that's really what we're doing. It's a choice between cat bonds or reinsurance. We know reinsurance is going to be cheaper because it's a little riskier, but how much cheaper and how much? So this is a good chance if you're a finance major to get into really, really unique security that if you want to talk about something in an interview would be, not many undergraduate students would get into this. And then it's also a good chance to learn Bloomberg. How do you find a bond in Bloomberg? And it's pretty tough to do, but once you get it, it's really pretty exciting. You find one, you start figuring, it's almost random trial and error because you're like, what do I do on this screen? And you just start clicking around and say, oh, there, finally that works. So it's a little frustrating. This one might not be as good because it may not have as much data, but could we reform? Y'all know this is kind of my pet peeve too. So reform this industry. So there's one state, I think it's Iowa, that has a state-run pool where their fees are like 80–90% cheaper than everybody else. Here's another one where we might be able to find some USA contacts. It's a question I wish I had asked when I was there. Why don't USA and State Farm go to the state and lobby to open up the competition on this market and let them sell this insurance? Why does the state of Texas have a dictated fee schedule for title insurance? There's no competition, right? The state says this is what you charge. And how much, why does the USA care about this business? So it'd be interesting. I think the challenge here is finding articles. This is an industry that it seems very, very protected and no one wants to touch it. And then this one is workers' comp. I'm going to try to sneak into a workers' comp conference by the Texas Insurance Commission. I don't know if I'm allowed to. They send me all their emails. I think this just because I'm a professor contact for them. But workers' comp, I have some background in, but it's pretty limited. What's currently going on with workers' comp? Some of y'all might have a background here. If you're an actuary, want to work in that field, it'd be a good place to study. That's another area we could probably find someone in an industry be willing to talk. Y'all probably have heard some of the commercials. There's a big workers' comp here in Texas I've heard on the radio multiple times. Also with the TIC having this conference, I could probably call the TIC and see if they would give us a contact, and I think they probably would. Not so much that we interview them, but someone who'd be willing to send us some articles and some ideas, so we could certainly try that. If anyone's interested in that, I could start getting that legwork done before you start working in this. So the question is there other stuff out there looking at these sites? So you look at CAS, do y'all go to CAS at all? So what is CAS talking about? I did a lot of presentations at CAS conferences. Always very scary to talk to actuaries when you're not an actuary, but what's going on? What are they talking about? What are their major issues? There may be other groups like that are researching issues. I talked about the NAIC. And what are they working on? You can look at their committees and see what kind of things they're working on. Are there any, and task force is really what you're looking for, because that's something that they're working on as a special study. So you have cybersecurity. I'm not, cybersecurity does work as a good topic here. It's not exciting to me, but if you're interested in it, someone could certainly tackle that. I don't know why it's not coming down the page. Yeah, there's something going on here. I don't understand that, but risk retention group, some very actuarially defined topics. Another place is the National Underwriter. So anytime you see the word underwriter, it's going to be on the property and casualty side. So what are they talking about? Cyber security. Cyber is in there. I'll add cyber just in case we have someone who wants to do. If we do that, I want to expand it out. Cyber and terrorism risk, put them both in there because they're kind of related, not necessarily. Correct. What am I missing that y'all think is a good topic based on what we talked about somewhere in this class? I've had students ask about credit scores. I don't know if there's much more there than what we've already done. I don't think any other state has done a major study like Texas. We talked homeowners, cat risk is the biggest thing on homeowners. It's hard for me to think of any other major issue on homeowners that's out there. There's not really any major liability risk there. On the commercial side, we did asbestos. I can't think of any major issues today that are like asbestos and medical malpractice that we saw. And those, there's just, and it could be because I've been retired for 10 years. So maybe I just don't hear those issues when I used to hear them when I was at USA, but I can't think of any. Can y'all think of any major issue facing the insurance industry? Note takers on a topic. All right, what I want to do is start assigning y'all to this. You're not doing this for life. So if you want to research other topics this weekend and send them to me, we can have one final discussion on Monday before we break up and groups start looking for articles. All right. So this is kind of first come, first serve. So if you've got one in mind, start yelling it out. Jacob?
I'm pretty interested in the first one.
Okay. Jeff? Okay. This is where we see if I remember y'all's names.
Professor, could I do the AI?
Who is that?
Johnny,
Johnny, which one?
the AI and telematics, the impact.
Leo? Seven?
I'll do the gig.
All right. And that one could be pretty interesting. Okay. Two L's?
Yes.
Okay. Oh. All right. Okay. All right.
I'll do the personal check as well.
All right. Oh man. Is that right?
Yes.
Okay. I think I called you Orion the first time.
Most people do that.
Oh, okay. We'll need that. We'll find out on Monday if there's enough out there. Oh, almost. Holiday, you thought of one yet? Which one? Say it louder.
AI and telematics.
Oh, the gig. Okay. Where is the gig? Right here? Oh, Your name was two L's, right? Okay. That's not how the word holiday is spelled, though. Is it?
No.
All right. So your parents wanted to make you stand out. All right.
I'll do the first one, then right next week.
Which one?
Yeah.
This one here? You're Ricardo, right? Alec or Mitali or Liam?
I kind of want to do global warming and cat bombs.
Oh, you want to do them both? All right. Well, you gotta decide.
Okay. Yeah, you can send me there for now. I'll think about it.
And if you change your mind, we'll do it again Monday. Liam or Mitali? Who else do we not have? Okay,
Can I
Alec.
do the global warming?
Okay. Alberto, right? Did I get all y'all's names right? Yeah, everybody? What does Lauren want to do? Right, so we're missing several people today. Liam, did you think of one?
Can I do the Uber one? Can you hear me?
Is that Liam?
Yes.
Okay. Yeah, that might be the last one on that one. Five's maybe the max. Let's see, how many students do we even have? 22. So yeah, five will be the max. Lauren, Steve, haven't seen him in a while. Johnny, we got Metallica, we got Jalen was here. He's just put out. Haven't seen Gracie in a while. Haven't seen Jonathan.
Yeah, sorry, Professor. There's like a massive accident on the highway, and
Okay.
I would.
And Paul was in my earlier class, as was others. Yeah. Oh, Jennifer's here. Okay. All right. So what we want to do. So we didn't get these last few. So yeah, if y'all change your mind, so I'll save this and put it out there on Blackboard, and I'll try to get the last few. So those aren't here tonight. The gig economy is taken. I'll contact our Buckle contact and see if he has any contacts with his previous employers.
What were you? For the cat did you say that we needed more information on that one, or is that okay?
Well, there's a lot of articles on it. To do this, what happens at extremes? I'm hoping we can use Bloomberg and actually load a cat bond and look at how its price behaved when there's a hurricane in the coast. I'm hoping. I've never tried it. It'd be fun to try it and see. I might have to call my friends at Victory Capital to help me out, but we could probably do that. I mean, you and Alec talk about it, because if you move, maybe he would move. So I'd like to have at least two on each one. So we got title.
Yeah.
Alec, you want to do cat bond?
I feel like I feel like you could do both. I feel like global warming affects like if the severity and frequency of global warming is going to go up, then cat bombs are going to be priced differently too.
Yeah, but
Like, I feel like
cat
it could.
bonds themselves make pretty extensive.
Yeah.
I'm good to go cat bombs.
I'll go with cat bonds too.
All right. I mean, y'all can change your mind. This isn't. At some point, you won't be able to change your mind, but. Right. So what we'll do on Monday is bring your laptops. What we're trying to do is find. This isn't a research paper, but you want a good, strong article that's 10 to 15 pages long, or 5 or 6 articles that are 3 to 4 pages long, that kind of thing. And then you'll do some additional. What you're trying to do is figure out, if you're an insurance company, what are the key things you want to know and understand about this issue. You're essentially almost think of this paper as USAA just hired you and your boss says, hey, we're really worried about, or we want to go talk to the CEO about how IIHS is really benefiting our industry. Let's go back and look at the history of how cars, it's kind of an assignment from an insurance company. So won't that be your perspective? The insurance company is worried about their customers. So how does it affect their customers? So you can do that as well. At USA, boy, it's so strange. The CEO said, "Oh, all this global warming stuff it's just pretend stuff. It doesn't really exist." So that's kind of a scary thing for a property casualty insurance company CEO to say, because most insurance companies have global warming in their annual reports. They're talking about it as a major risk. But you're not doing a paper on global warming. You're doing a paper on global warming's impact on the insurance industry and property. So always keep it focused on the insurance industry. The gig economy, again, I'll try to find this guy. I think you can find a lot here. You might get real specific AI and auto insurance and see what comes up. What would be cool is take out your Chat GPT and type it in there and see what Chat GPT says AI is doing to the insurance industry. AI auto insurance. This is probably a company called AI. Insurance, the impact of AI on the future of insurance. So there you go, right there. That's pretty exciting. So what we can do Monday is y'all can think, what should we Google? How many of y'all have Chat GPT on your phones or on your computers? So, we're almost scaring you not to use it, but we're actually supposed to be encouraging you to use it for research, not for plagiarism, but for research. So you could do it. But that looks like a pretty good article right there. Did y'all catch that one? Look who wrote it. It makes it even better. Right? McKinsey, whether you love them or hate them, they do good research. So let's see how long this article is. Looks like it could be pretty substantial. And then the other thing you're looking for are links that you can go into other places. That looks pretty substantial, doesn't it?
Yeah.
So y'all got that. But you saw how I Googled it? And just right up there at the well, you get all the advertising stuff first, but really good article there. Hey PMG, AI and insurance, a catalyst for change. That looks like a really good article. Now you're all going to want to change your article to that one, right? I mean, just right there, you have it. But you also have global warming and homeowners insurance. You think these are such specialized topics that how would anyone be writing about them? But these industries write a lot of white papers. They just do. And so you'll see, you have to get past how will climate change impact homeowners insurance in all 50 states? Who wrote it? I look, Motley Fool, yeah, probably not so good. Another McKinsey. McKinsey's great. The climate change and P&C insurance, the threat and opportunity. Who's doing global warming? There's a great good article right there. So you see what we want to do on Monday. Look at the dates. Y'all got to be a little more current than I am, because I'm giving you a lot of these historical perspectives. But you want a little more current. Okay, Jalen, you missed out on our little discussion here. So we're picking topics for paper 2. So maybe catch me right after class and you see what you want to be in there, unless you already have a pretty good idea. I think this one's taken. Oh, I forgot to take Alec out of there. So we'll stop at 4. So Jalen, you could join Alvaro. He would love to have some help on that one. All right, everybody understand what we're going to do on Monday? Monday's a pretty important one. So we're going to decide on the articles. Then you'll write your independent paper. And then when we get closer to the end of the semester, we'll set up some time for each team to present about 20 minutes. Not necessarily you get together and do a presentation like PowerPoint, but you at least say, hey, I'm going to talk about this. You talk about this. You talk about this. Just real quickly break it up, assign it. We might have 15 minutes in class where y'all can put that together before we do that. All right, any questions on paper 2? All right, so I'll save this. I'll put it out there, hopefully on Canvas if I remember. Oh, I already saved it. All right, good. So let's start workers' comp, but we won't get too far into it. So workers' comp is something that most of you will have. You won't really notice it. And we'll talk about why you won't notice it because it's been integrated with other forms of this type of insurance. It's a really hard insurance to talk about because every state is different. Every state has their unique quirks. And as we've been talking, workers' comp had a major upheaval about 30 years ago, and that changed everything. Very similar to medical malpractice, asbestos, workers' comp had their period of time where it just got out of whack and the states had to reform. So why do we have workers' comp? So if you think about the United States, we went from agrarian economy to the industrial age. Now, most people think, well, we went from the safety of the farm to the dangers of the factory, but farms were more dangerous than the factories. It's just, we didn't care about it. It's like, you broke your leg, and, your dad's like, well, walk it off. It was just small mom and pop, and you're just at risk. Suddenly now you have people who have money that when someone gets injured, they can do something about it. So we went from 96% agriculture, which is pretty amazing, to 2% agriculture. I've always had this belief, and I saw Warren Buffett just said the same thing. He said the poorest 25%, I can't read it. He may have said poorest 2%. I think he said the poorest 2% of workers, so people employed, are richer than Rockefeller was. Because how much industrial age is automated, we have electricity, we have cars, we have all this kind of stuff. So our economy has changed really dramatically. I mean, that's pretty amazing, isn't it? And China's going through the same thing. They're trying to go from 70% ag to whatever percent, moving people into the cities. Changes everything quite dramatically. So in the early cases, what employers said was, if you're an employee, and you get injured on the job, you have less protection than a customer getting injured in our firm. A customer can sue, a customer can get reimbursement, but an employee, you're on your own. Why? Because if you threaten to sue them, they'll just fire you. So, right, they have something over your head. It's like, sue us and you'll lose your job. You might need other employers to back you up. And they're saying, I'm not going to back you up. I don't want to lose my job either. So, they're worrying about retaliation. And then if you do sue, the employer is going to say, we weren't liable. It's the other employees. They're the one that were negligent. We trained them well. It's not our fault. They dropped out off the second floor or whatever. So the employer would push the risk off to other employees. And then the one thing that they love to talk about was assumption of risk. Hey, it's a coal mine. It's risky. Everybody knows it's risky. You took this job knowing that you could die in the coal mine. You assume that risk, and if you didn't want to work here, you could go somewhere else. And the fact that you worked here, we had to pay you more money to induce you to come here, so you're already getting paid for the risk anyway. I don't know, y'all know what a life of a coal miner is. There's a really good book out there. I don't know if I can find it. George Orwell. Coal miner. I'd encourage you to read it. I forget the name of it though. It's in here somewhere. Not dying. It's got a strange title to it. Oh, there it is. Road to Wiggum. Anybody have read that book before? So you go into work and you just hate your job. You're like, I can't take it anymore. Read this book and you'll love your job a lot. He goes in quite a bit of detail about how horrible that life was and just how dangerous it was. We've even seen it here in the last few years with people getting trapped in coal mines. So the argument was you knew it was dangerous when you took the job. So what happened was the court started chipping away at those defenses. And the employers started discovering that they were getting sued quite frequently and losing quite a bit of money. And they started arguing that puts the US at a huge disadvantage to the rest of the world. We have a lot of lawyers here, people are suing here, other countries aren't. Our businesses are not gonna be able to compete with Europe and other countries or other continents. And so the first law was Wisconsin in 1911, passed workers' comp. The last state was 1948. So over about a 37-year period, all 50 states adopted workers' comp laws at the state level, not at the federal level. There is no workers' comp at the federal level. I know you have OSHA. You have to kind of think about it. OSHA is job safety. So it's definitely related to workers' comp, but it's not the insurance. OSHA is the rules that firms have to follow. So that is federal. But workers' comp is when someone gets injured on the job, what insurance does the employer have to provide? And here's the real key right here, to really understanding that workers' comp is based on strict liability. So we talked a little bit about strict liability. So when we're talking about negligence, you had to prove someone was negligent in order to get compensation from them. Strict liability says you no longer have to prove negligence. If you're injured on the job, it's just assumed that the employer was negligent. It's just that they're liable, not that they're negligent, but that they're liable. So the employer is liable regardless of fault. Now, why in the world would the employer agree to that? Well, the reason they agree to that is the employee gives up their right to sue the employer. Now, you might say that can't be true, because I can just go out there and Google workers' lawyer litigation. Even there's I haven't been on I-10 in a while. There used to be a big billboard on I-10 for workers' comp. Is that still out there? You may know. Been driven by there and stuff. Workers' comp lawyers. There he is, right there. Looks like a friendly guy, right? He probably doesn't have a degree in legal. They probably just hired him to wear a suit. Best 10 workers' comp attorneys. Why in the world are these trial lawyers advertising workers' comp? So obviously there's something going on here. That's why I said workers' comp would be interesting to study. There are trial lawyers, personal injury lawyers, who are making money suing companies under workers' comp. So it's an interesting. Where is the gray area in workers' comp, and what are they suing for, and what are they trying to do? But that's the theory behind it. The employer agrees to be liable regardless of negligence if the employee agrees to give up the right to sue. So that's the theory behind it. And they give it their rights to general damages like pain and suffering. In fact, what they're going to be awarded is whatever the state says. So the benefits are going to be scheduled by the state rather than a jury deciding. What does that do? That should save the employer a lot of legal costs. They don't have to hire lawyers to go to court and argue their case. The state says, hey, if you lose an arm, this is what you get. If you lose a left eye, this is what you get, whatever. It's just scheduled as kind of a grotesque part of the state law, but it's scheduled out, this is what you get. It's extremely administratively burdensome, and it's regulated and administered by the state. There's some question of when does workers' comp apply and when does general liability apply. So let's say you're working for, I'm trying to think of, I was going to say Xerox. I guess Xerox makes copiers. You're an employee working for Xerox using a Xerox copy machine at Xerox. Is that a product liability claim, or is that a workers' comp claim if the machine blows up and harms you? That's some of the debate that we're having here. What is the trial lawyer going to ask? Where can I get more money? Because remember, in workers' comp, you can't get general, you can't get pain and suffering. You're limited. So that's kind of the debate they can have. Does that mean Xerox shouldn't use their own copiers on the job, so you don't have that debate? So there are some gray areas that can come into play. And so in the 80s, workers' comp was having a serious problem, mainly because of what was going on in the health insurance, healthcare areas. The move to managed care. A lot of healthcare was shifting their costs to workers' comp because they couldn't make enough money in other places. So So that's the current lay of, that's how we got where we are today. In the US, workers' comp represents 1.6% of employer spending. Workers' comp accounted for 4.4% of employer spending in the construction industry, 1.8% in manufacturing, and 1.3% in services. Obviously, workers' comp is a huge issue in the construction area. This is a very dangerous job. So, you know, in Texas, I think is it 10 employees? You know, you're exempt from workers' comp if you have a smaller workforce, and a lot of construction firms are really small mom and pop firms. I would really want to know if someone works on my house or my building if they have workers' comp for their employees, because I sure don't want them suing me. But what percentage of construction firms actually are covered by workers' comp would be an interesting question to ask. The service industry does have workers' comp. We'll talk a little bit about what's going on there. So how does workers' comp actually function and work? So it covers all employees unless excluded. So if you're not going to cover an employee, you have to kick them out. Generally, the ones that are excluded are domestic service, casual work. So that may be where Uber comes in. So those are doing the gig economy. That may be a question to ask when you're doing that one, right? So you may want to ask about workers' comp and the gig economy, not just their auto insurance and their, you know, it's the workers' comp as well. If a Uber driver gets injured while driving, my guess is Uber doesn't pay any workers' comp. But if you see a state like California, which is trying to force Uber to count those employees as Uber employees for this very reason, you know, that may shift them over to workers' comp. Agriculture environment tends not to have workers' comp. It's kind of an excluded. And then really, really small businesses. That's why I brought out construction firms, really, really small construction. I should ask my buddy who started his own architectural firm. He does a lot of house remodelings. I have to ask him if he covers the employees of workers' comp. Because he may not even have any employees. He uses a bunch of subcontractors. So I have to ask him, when you hire a subcontractor, do you care at all about workers' comp? Do you even ask that question? It seems like it would be pretty important. So there's a lot of people that are not covered. If you go work at USAA, you're covered. You probably won't even ask about it. You may not even notice it, but you'd be covered. So what does it cover? Here's the general definition. It's accidents arising out of and in the course of employment. And here's where the lawyers are going to have some room to act. What does it mean arising out of and in the course of employment? What happened with COVID that might radically change that? Working from home, right? You're working at home, you trip over something and you fall. Is that a workers' comp claim? You trip over your dog. Is that workers' comp? What if you trip over your dog because your boss called you, you had to go get your cell phone and you tripped over your dog? Does that change it at all? You know, those kind of things you got to think about. What if you have some mental anguish because you're Zooming 20 hours a week? And that's causing you mental anguish and you just can't take it anymore or whatever. Who knows? What if you get a blood clot because you're sitting there on a Zoom for 20 hours a week because you're sitting there, you know, those are kind of things that people are starting to ask. And that is a big issue for workers' comp. That's why I want to go to that conference and see how much they talked about work from home and how much that has changed this environment. Occupational disease, that can be covered. Sometimes it's pretty questionable. So one issue I thought was interesting was airline workers sued for second hand smoke. Now y'all don't know about this because how many of y'all been on an airplane where people were smoking? Have you been on an airplane with smokers? That's before your time. You're a lot younger than I am though, so I probably had like 5 or 6 years. Can you believe that? They had people on the plane smoking. Then they had smoking sections, which is even just as stupid because you put them all in the back, you're on a plane. you're gonna notice it. But flight attendants were getting lung cancer, and they thought it's because I'm on this airplane several hours a day with all these smokers. So the question is, whom did they sue? Did they sue their employers for workers' comp, or did they sue the tobacco companies? So, you know, you could read that and see, but 60,000 flight attendants, settlement with whom? Tobacco companies. Why didn't they sue American Airlines United? That sounds like a workers' claim, doesn't it? So, you know, that's kind of the question you ask with these occupational risk. What's not covered? An employee that's intoxicated at the time of the injury. Injuries incurred away from work. Well, what does that mean? If your boss is calling you constantly on your cell phone and expects you to answer, and you answer, we're going to see a case here pretty soon where a woman sued because her employer told her she had to have ready access to a phone, and that caused an auto accident. She sued under workers' comp. Heart attacks on the job. What if your job is incredibly stressful and you can show that that stress on the job is what caused your heart ailment? You know, you're starting to see why those personal injury lawyers are suing. Coffee breaks. When does your coffee break start? Is it when you turn your chair to get up? Is it when you get up, when you start walking? When exactly does the coffee, do you have to be in the break room for it to count? You have to say, I'm going on break for it to count. You know, when does it start? When does the clock start working? This, I think, has been really questioned. Injuries to and from work, especially if we go to autonomous vehicles and your morning staff meeting is in your car while it's driving you to work. What if you get injured during that time because you're at work, right? You know, Zoom is changing things. Injuries caused by horseplay between employees. I don't know how you define horseplay versus, you know, joking around, you know, who knows. But there are some exceptions. Again, remember, it's 50 states and the rules are going to be different in every state, what's covered and what's not covered. All right, we'll do benefits. I don't want to get in the middle of this. We'll do benefits next time.